afternoon. It's Bill Gross, the LA probate expert, and this is our Tuesday afternoon real estate investing Zoom.com. We get together every Tuesday at 3 p.m., talk about all things real estate investing, from brand new, want to get started, investors, wholesalers, to seasoned investors, real estate brokers like myself, vendors. We get together to explore all things possible to increase our income together and increase our long-term wealth. Sometimes we interview actual investors, sometimes coaches, sometimes vendors. And today, I'm really excited to have a vendor that I've come across. I saw her do a presentation and just knocked my socks off, both in terms of her quality of the knowledge, but also I think it's a tool that today people are looking to increase their wealth. They're going to look to unlock perhaps some of those stocks that they haven't run down completely. Some of those stocks, they're dormant in IRA or other investment opportunities, and see how to invest them into real estate. So I'm really excited to have here Reneika Lightbourne, and she is with Advanta IRA on how to utilize various programs on adding assets to your real estate portfolio. So Reneika, welcome.
Thank you so much, Bill. I really appreciate the opportunity to be a speaker and kind of knowledge share with you and your audience. So thank you once again.
Thank you. And so just a little background on yourself. Where did you grow up, and how did you get into working for Advanta or into the financial services business?
Okay, so I'm originally from Bahamas, so born and raised in Bahamas. I went to college.
Which island?
I was born in Freeport, but my family is Freeport, Abaco, just, the Bahamas in general.
Okay.
I went to college in the Midwest, St. Charles, like 20 minutes from St. Louis. After I graduated, I came down to Atlanta. I've been here ever since. Originally got into B2B financial services, and then I just happened to, as I started to get into investing, specifically real estate investing, it kind of led to my path of self-directing. So prior to joining Advanta as a staff, I'm also an Advanta client. So I'll actively self-direct my retirement account. In terms of working for Advanta, I was actually, as a client, going to attend one of our Lunch and Learn networking events. And the opportunity opened up to where they was looking for someone, and I was using the office a lot for the type of investment I was doing at the time. And the person they had there at the time, I think he had moved back to New York. So it was just great timing, and it worked out. So
very nice. True or false? It's better in the Bahamas.
Say that one more time.
True or false? It's better in the Bahamas.
It's true. It's every place has its plus and minus, but it's home for me. And it's so crazy. I was telling a friend, literally my backyard growing up is the ocean. And, not that I didn't appreciate it, but now I crave it. Like anytime I have a chance to go to the ocean or to the water, I want to do it. But literally, that's my backyard. If I go home now, I'm literally feet away from the ocean. So
I lived in Florida for 2 years, and then my in-laws lived there after I was married. So we went there every year, and then we went to the Bahamas, because going to the Bahamas is kind of like going to Vegas from Florida. It's so inexpensive and close, and there's such a variety of things to do there. It's just amazing. So anyhow, wow. And I didn't notice you're from Bahamas, but I see the big smile. That's like the classic Bahamian smile you have there. So let's talk about Advanta as a customer and self-directed IRAs. What got you into that? And then what makes you want to help other people in that same area?
Yeah, so Advanta, we're one of the leading self-directed IRA administrators in the business. We've been in the business for nearly 20 years. Our headquarters is in Largo, Florida, so the general Tampa Bay area. But I'm in the Atlanta office, and we work with clients nationwide. We have well over $2 billion under administration now. It's a small company, but we're still, we're well known in terms of in the industry to being very proactive and, responsive, and that concierge style service that we really cater to our clients.
Nice. And so how do customers, I know I saw your presentation. I've used it at Advanta, both as a credit card company, as a self-directed IRA, though not currently. But I know that you have a wide variety of IRA products. And then I guess that in turn allows people to use those various products in investment, right? It's not just IRAs, but also includes health savings accounts.
Absolutely.
And 401ks and SEPs. So explain a little bit how you get into all those areas.
Okay. So, most people we're familiar with the traditional IRAs at your brokerage firm, whether it's a big bank or small bank, in terms of, stocks, bonds, mutual funds. But in reality, the IRS said, hey, you can use qualified retirement accounts like the regular traditional IRAs that you're familiar with, traditional IRAs, Roth IRAs for individuals. If you are, employed, or you have if you have a side business or you're self-employed, you can look to self-direct SEPs, simples, solo 401ks. It's really attractive to real estate investors. That's something I get a lot of inquiry about.
Yeah.
If you have children, you can certainly look to self-direct some smaller accounts like educational savings account. And this is where you can put in $2,000 per year per child to cover anything related to education expense. You can also self-direct your HSA to cover medical related expenses, as long as you have a high deductible plan. So we have, pretty much any type of IRA that's out there, and of course, employer sponsored plan that you can look to use it to invest in alternative assets.
And I think as a real estate broker, I don't think I really realized the advantages of incorporation until a couple of years ago. And when I looked at the numbers, it was a much lower threshold than I had supposed. I would say if your net profit's over $100,000, you should really look at incorporating, because then you have the corporate IRA advantage versus individual. And then the more money you put away lowers your taxes. You don't have the cash, but with your self-directed program, you can reactivate that money, put that back to use.
Yeah, absolutely. So the solo 401ks or the employer-sponsored plans have the higher contribution limits. So a lot of times when I'm working with real estate agents or brokers or just someone who has their own business with a solo 401k, you can put a lot more into your retirement account. So for instance, you can possibly put $61,000 into a solo 401k if you're under the age of 50, or $67,500 for 2022 if you're over the age of 50, as opposed to with an IRA, whether it's a traditional or Roth, you can only put in $6,000 a year or $7,000 if you're over 50. So you have that higher contribution limits to kind of stockpile your retirement account.
And then on top of that, you can also do the health savings account on top of that even.
Yes, you can have multiple accounts. So you can have a solo 401k if you're eligible for it. You have to make sure that you have earned income and not have any employees. Or if you have employees with a solo 401k, they have to be under the age of 21, have not worked for you for 3 years consecutively, or work more than 1,000 hours. Those requirements are changing somewhat, but you can still have a solo 401k and also have an IRA or an HSA or an ESA.
Got it. So that outlines the possible doors into the program, various IRA options, wide variety. And then not on here, I guess you said also educational IRAs. Here's my email from when I signed up myself. I'll take that off. So that's the door in. So let's talk about, once I decide I want to do that and I fund my IRA, what are my options on investing with the IRA? How can I put that money to work in a way that my Wells Fargo giving me like 0.00001% interest? What can you offer that can help me?
Okay, so let me just really quickly highlight exactly what is a self-directed IRA, just for simplicity purpose. A self-directed IRA just means that you, as the account owner, you have the ability to control your retirement funds. You decide what is it that you want to invest in. You get to decide exactly being able to diversify your account into alternative assets, like you can invest in real estate. For real estate, that's, it's pretty broad, but you can certainly use to invest in a single family home, whether you're going to do it as a long-term or short-term rental. You can invest in the likes of commercial projects, whether it's, a storage unit or it's a warehouse. You can use IRA funds or retirement funds to invest in notes and mortgages, tax liens and tax deeds. Literally, the sky is the limit in terms of the things that's available to you. You can invest in private equities, precious metals, digital assets. The list goes on in terms of what's on the table for you. The only two investments the IRS say that you cannot invest in is life insurance and collectibles. That's pretty straightforward, with collectibles being antique art, wine, stamps, of anything of that nature, but everything else is on the table for you. You find the investment, we just help you dot the I's, cross the T's, and make sure it's done correctly within the IRA.
Now, you can have multiple accounts, but most investors are going to look at each multiple check maybe as different. So you have to work that out with whoever you're investing with. But I imagine you can have multiple types of IRA accounts and have multiple real estate investments, right? You can have some in, some cash flowing properties, other ones that are flipping and things like that. So one of the questions, I think one of the big misconceptions is that this type of money has to be for some sort of a longer term hold. But really, just like any other account, those assets can be bought and sold. There's some fees with drawing checks and fees with depositing and such. But basically, it is appropriate vehicle for financing, maybe fixing and flipping properties once or twice a year or every other year, something like that, right? These are monies that you can access regularly if you need to.
Absolutely. In terms of investing, you can, turn that money as quickly as you want to or need to when making the investments. You can do it directly through the IRA, meaning you open your account, you fund it, and you tell Advanta, hey, I want to buy 123 Main Street, whether you're fixing and flipping or you're keeping it as a rental, or you can do indirectly through an LLC. We can kind of harp on that at a later point. LLC, where you're as a fix and flipper or a tax lien investor, you're just wheeling and dealing inside of that LLC. But yes, the key thing to remember is when you make an investment inside of your IRA, it's tax sheltered. All of the income that's generated flows back into the retirement account, but you can, go back into your next deal. So again, if you're a fix and flipper, if you're doing, 1 or 2 properties a year, perfectly fine. You find a property, buy low, fix it up, sell it, and then you can rinse and repeat that strategy. And you have the ability to invest in, you can have some rentals, you can have a fix and flip project, you can have, notes, whatever it is that you're looking to do.
What's the most common profile of somebody using I did it, so I guess I know what I do, but what is the most common profile for somebody who is investing using an IRA for their real estate?
So most of our clients has some type of holdings with real estate. So again, whether it's investing in a syndication project or they're JVing on a deal to do a fix and flip or a rental, but it's always typically real estate and then private equity in terms of investing in a private or startup company. Okay. But I would say the bulk of our clients are real estate related investors. And that's the key with self-directing. You get to use your existing skill set. So if you're actively investing in real estate today, why not replicate that same strategy in your IRA?
And that's the challenge, for me, I've made really good money the last few years and I have access to cash to invest. And so I'm looking for real estate deals to invest in. And then, the excess money, I get a lot of pressure from family and financial advisors. Oh, you should invest in the stock market. I'm like, the game just seems rigged. I just feel like I'm playing 3-card Monte with some thieves on the boulevard. Because I don't really know anything about that business that I can't read in a newspaper versus real estate. I have some skills, I have some knowledge, and I meet people, and I know good people, I know bad people to avoid. So it just seems to make so much sense for something like that. Okay, so now when you buy something though, it is different. Meaning, if I find a property I want to buy, let's say, and this is this my down payment and can I borrow the rest, or do I need to buy it all for cash, or do I need to get a loan to some different entity? How would I buy a property using my money in my IRA?
So the process is pretty straightforward. Let's just say you had all of the money to buy 123 Main Street in your IRA, like you're moving funds over from an existing IRA. You would, identify the property, work with your Advanta account manager to fill out the appropriate paperwork. Advanta will work with your closing agent, closing attorney, send the funds where it needs to go, and receive back all of the paperwork, so the deed and so forth. If it's a rental, tenants send the rental check to Advanta. In this case, let's just say, even if you had all of the money, you didn't want to tie up all the funds into one property, you wanted to, buy multiple properties, or you just had a portion. You can certainly use leverage, but it's very important that you know that in order to use leverage, the loan type itself has to be a non-recourse loan when it comes to investing in real estate in your IRA. Non-recourse just simply means that you, as the investor, you're not personally guaranteeing any loans. It's actually the IRA that's taking out the loan. So you would work with non-recourse lenders. There's a long list of non-recourse lenders nationwide. We don't endorse anyone in particular, but I can certainly provide you a comprehensive list of lenders so you can reach out and find out what their requirements are. But specifically, you would, put down, let's just say a property is $100,000. You would put down $20,000 as a down payment from your IRA, take out a non-recourse from that preferred lender of yours for the remaining $80,000. You fix the property up and you sell it. The key thing with that in an IRA scenario is whatever your down payment is. So if you put down 20%, 20% will flow back into your IRA without any tax liabilities. However, because you use leverage, because you use loan, the remaining 80% of the profits coming back would be subject to what's called UDFI tax, unrelated debt finance income tax. Obviously, as that loan is repaid, that loan goes away. You can work with your CPA or a tax professional to see if you can get, some deductions as relates specifically to UDFI tax. That's in an IRA. And a solo 401k, and this is why a lot of real estate investors specifically like the solo 401k product. Specifically, let's just say same scenario. Property's 100,000, you're going to put down 20,000 as a down payment in your solo 401k, take out a non-recourse loan for that remaining 80,000. When you fix the property up and sell it, 100% of that profit would flow back into the solo 401k without being subject to that UDFI tax.
Nice.
So that's a really, really good advantage. Another way that you can fund, you can certainly, JB, you can partner with other investors. You do want to keep in mind that when you partner with your IRA, whether it's yourself or someone else, that you're doing it from the beginning at the onset of the transaction. So let's just say, 123 Main Street's 100,000, your IRA or your 401k is putting in, for simplicity, 50%, 50,000, and the other person or the other party on the deal is putting in the remaining 50, or whatever the percentage is. So that's one way you can structure where you're partnering with other investors. When you partner, whatever the IRA puts in or the 401k puts in gets back. So in that example, if the IRA put in 50% of the money, it's going to get back 50% of the profits, whether it's rental or it's, the sale at the end, but also pay 50% of the expenses or whatever percentage it owns on that investment.
So all these tax strategies are important. I tell you, I've learned the last couple of years, you start making money, you can make more money by making the right tax decisions sometimes than you can working hard and doing an extra deal or two. So definitely
it's a very powerful strategy. I don't try to pit self-directing against the stock market. It's just an additional tool in the toolbox. So it gives you the ability to, again, use your existing skill set. If you're already into real estate, it allow you to diversify your account. Like, for instance, we see what's going on in the stock market. Whereas with real estate, we know it always holds or retains some value. So if you have a portion of your retirement funds, allocated into real estate or some other alternative, it's a really good hedge for you.
Nice. And it seems like there's so many different ways to skin this cat. It's not just one system, one method. You really have a very diverse series of tools to give people some flexibility.
Absolutely.
Okay. So look, guys, you guys have an expert here. Obviously, she knows this stuff. Come on. She seems like she's about 18 years old, but she obviously has been at this game for a while, knows a lot, and works with some very sophisticated investors. So feel free to jump in, either raise your hand on the app. Excuse me. Wow.
I do want to, if you have questions, feel free to put it in the chat and or unmute and say, but I do want to, if self-directing is a new concept for you, I just want you to just remember 3 simple steps. Any type of IRA, so whether, again, it's your existing traditional or Roth IRA or HSA, any type of IRA or former employer plan, like an old 401k or 403b or a TSP type plan, can be self-directed. With self-direction, you're always in control. Nothing happens until you say it does. You get to choose what is it that you want to invest in. At Advanta, we're not a broker-dealer. We don't have a list of investments for you to choose from. You have to go out and find it. Once you do, we help you, again, make sure it's done correctly in the name of the IRA. And then finally, step 3 is just know that all of the income that's generated from that investment will flow back into the retirement account, tax sheltered. If there's any expenses associated with it, it'll be paid out of the IRA. Again, if you're doing it directly through the IRA, you tell Advanta, hey, I have a property and I got to pay property tax. Well, you send us the invoice, you upload it to your online portal with us, we get it paid within 24 to 48 hours. If you're doing it indirectly through an LLC, and I can talk more about that if no questions come in, where you act as manager, or you can have someone act as manager for an LLC, not an existing LLC, but an LLC that's owned by an IRA, and you actually control the purse string of the funds, meaning if you're wheeling and dealing as a tax lien investor or a fix and flipper, you don't have to reach out to Advanta to say, hey, send the money here, pay this, do that. You control it. Same rules apply though. Any money leaving that LLC's bank account is for the retirement. Any money coming back in is from the returns of whatever you invested in. Okay, so yes, thank you, Bill, for putting my contact information in the chat.
I'm having a tough time here. I had a cold last week, came down with COVID after that. So I'm struggling with cough drops and water here and trying to get through this. So forgive me for jumping off here. So a lot of us have had IRAs or retirements where we left companies and they put money in some stupid collection of Fidelity accounts or Vanguard accounts. And here's a chance to correct that and put that to use the way you want to. I think that's the most common that I see, are people have nice chunks of cash. Also, people want to get into real estate investing and they're working their 9 to 5 and not sure how to make that jump. And here's a way to kind of supercharge the assets you have available. You find a good deal, you can invest, not just, again, if you're happy with your investments in stocks and bonds, by all means, keep them. But most people I find are kind of reluctantly playing in an area they know nothing about. If you can find a real estate investment that's going to give you a really good return, why not use your own money rather than just cut the bank in for the profits? And that's the advantage that they're talking about here.
Absolutely.
So if you have, go ahead. I'm sorry.
Now, I was going to reference while you're talking about that, like a lot of times, people may choose to self-direct because it's a new source of capital for them. If you are, let's just say you're, a syndicator and you buy apartment complex, if you have, clients that have invested with you in the past, you can just show them, hey, this is another way that you can invest with me. Most times people have, again, to your point, an old 401k that's just sitting idle where, they're still in their, productive working years. They may not need their retirement account for the next 10, 15, 20 years. They're more inclined to want to put those funds to work, diversify, grow it, as opposed to touching, let's just say, their personal savings that they may have, like an emergency or, taking out a specific loan to do an investment. So that's another way we work with, capital raisers or just individual investors as a whole.
Oh, nice. It's another way for people who are looking to raise capital to help their customers more easily. And if you don't quite have enough to get to a certain threshold, maybe the money's in the IRA, or you put this year's, like in my case, I could fund my IRA early this year if I need the extra cash. I'm saving extra cash right now, so I don't have extra money in my IRA to put somewhere. I have extra cash money to invest somewhere, and investments are a little hard to find right now. So if you happen to have looking for an LP in Florida or Texas, multifamily units, 200 unit and up, I'm all ears. Send me deals. I'd love to look at it. Okay, I can advertise my own personal needs, I guess, right? Is that greedy?
Yes, I think I got a direct question where someone's going to reach out later for a consultation. And that's the thing. If you have specific questions you want to do a one-on-one, feel free to reach out to me. I'm happy to get on a call with you and talk through your scenario. Also, too, I want to mention, with self-directing or retirement accounts as a whole, statistically, there's like $30+ trillion sitting in retirement accounts. And less than 4% of that is actually self-directed. So it's a great opportunity, again, to grow the space. Self-directing as a whole has been around since the 70s. Obviously, our role here at Advanta is to kind of, help spread the word and, grow self-directing, make it readily available to every American. But it's still a lot of room for more people to actively include this in, their investment strategy or to build wealth. So.
Well, it's not even the part that's not self-directed. I think so many people, it's just kind of sitting there and being ignored. They don't know what to do with it. You join a new company, you fill out some forms, and a year or two goes by, money's being put in. If you're fortunate, 10 years go by, more money's put in. But you never really sit down and made the decisions what to do with the capital. And like I said, for many people, the system of investing in stocks and bonds is, I won't say overwhelming. It's just difficult to travel. And if you happen to be looking to invest in real estate and you find a great deal, here's a chance to put money in something that is, more stable because you know where it is, you know where the asset is. Some of us invest in companies, we don't really know what the assets are, what the underlying assets are. If you invested in banks in the 2008 period, you didn't know that they were using these synthetic CDOs to invest in mortgages that were upside down, and your money just disappears. And so this is a case where you can really put more control in your finances and direct it to something that's going to be important to you in the long run.
Absolutely. With self-directing, it just it not only lets you invest with what but also whom Like if you're part of a local RIA group, the person that's sitting next to you can be the one that you do a deal with. Or if you're new to the space, I would say we have a lot of resources out there. We don't give our clients any advice in terms of tax, legal, or investment, but we have a great number of resources out there for you to kind of get familiar, get your feet wet, understand what it is, how it works, and everything that's on the table for you. And if you, at least start going down that rabbit hole, eventually you'll find something that resonates with you. And in this case, for most investors, myself included, it's real estate.
Yeah. Look at you smile when you say that, by the way. Real estate, every time you say real estate, you light up. So I know you don't want to talk about this, but I'm sure you got some good stories about somebody put all their retirement money in crypto because you guys allow crypto investments. What's that been like the last 3 days?
Say it one more time. I think I heard crypto.
Yeah, I was gonna say, I know you've had some fun stories in the area. You can't talk about any particulars, but I'm sure you've had some fun stories regarding people putting their retirement money into crypto in the last 30 days and maybe giving you a call frantically, asking what happened to that, or?
So we do have crypto investors. I have crypto in my Roth IRA. For me, the cryptos that I hold is more so of a long-term hold. So, hey, the space is still, in its infancy, give it time to develop, whether it's, going to be another 10, 15, 20 years. I'm okay with that. Obviously, with any investment, especially crypto being one of the newest assets since the 1600s, it is volatile. So you have to be able to stomach that, but you want to make sure, like you would with any real estate deal, you're doing your due diligence when it comes to crypto or any other investment, making sure, it's of a sound investment. But yeah, we do have people that are, obviously concerned, but crypto is.
Some fun phone calls in the last 3 days, I'm sure. Like we all have.
Yeah,
we all had those. I mean, I have a customer who's been trading crypto and buying land to hold value, and all of a sudden he was buying land. He's buying land. All of a sudden he wants to sell a piece, and another. He's like frantically cutting the prices and all the land to get his cash back because he was one of those aggressive guys that maybe went a little too far.
Yeah, I haven't heard directly from any of our clients in terms of losing any. Well, they haven't lost yet because they haven't. I don't know if they've lost yet because they haven't sold in terms of crypto. But
right.
With us, our clients can buy crypto, but we don't hold it directly. They do it through whatever exchange that they want to go with. So they can do it directly through an LLC and open up an platform, an account for that LLC that's owned by the IRA with their preferred exchange. Or we have a couple companies out there that do API systems where they open up an account and the client is responsible. Again, they're responsible for making sure that they're comfortable with the investment. If you have cash sitting with us, it is insured, FDIC insured, but it's once you make that investment to say, hey, you're going to go and buy 123 Main Street, or you're going to go out and buy cryptocurrency, you as the investor take on the responsibility that you're comfortable with it. And of course, with crypto right now, it's extremely volatile.
It's fun. So it's kind of like entertainment for free, right? You have to pay for the movies. You just watch your crypto account during the day. But I think if ever you're going to hold cryptocurrency, probably it makes sense in your long-term retirement because it tends to be a longer-term investment when people think about, store value part of crypto. I'm not talking about trading and all that, but for people think of it as a long-term store of value, that's where you would put it, would be in a long-term retirement fund that you want over time to win out, not necessarily subject to ups and downs. So it's a great place to put it. Okay, look, she's got an amazing smile. She has amazing knowledge of this financial service space. It sounds like from crypto through stocks, bonds, and real estate. If you have questions, raise your hand, throw in the chat box, unmute yourself and jump in family style. This is meant to be interactive. I know this topic is not right down the wheelhouse, but my hope was that there's a couple of you out there who have a few more resources when you look at this as an alternative. And I know for me, it's something definitely that is in my game plan. When the time is right to invest rather than somebody else's investments in my own. Anybody else have any questions for Reneika?
I see a question just came in the chat.
Mm-hmm. Yeah, so Alex has a fixer-upper with, he got one with a partial self-directed self-IRA. Now it already sounds complicated. Then he refinanced after the repair. It was told there was a distribution that you can collect the rents and contribute back to the IRA and avoid tax consequences. Well, that sounds like an accountant's question.
Yeah, that's more like a tax liability for CPA. But is it his IRA or is it someone else's IRA? Like whose?
I think again, just to take it out of individuals' advice and more into the general realm, definitely the smart thing to do is keep these things segregated and tracked, just to keep it easy for yourself. Separate bank accounts, separate LLCs, separate use of these funds. That way, when it comes time to try to prove up these things, I know from personal experience, having in the same account makes the case a lot stronger. But I mean, unless Reneika, you're anxious to answer a question like that, I would say it probably is a question for your tax preparer. One of the things I learned, my father was an attorney. He would say, you can write off whatever you want. It's just whether or not it's going to stand up when the IRS audits you is the question. I mean, it's self-directed with equity trust. Was equity trust a
So
competitor?
was it your personal IRA? If it was your personal IRA, and if you refinance out using a traditional type loan, meaning a non-recourse loan, then yes. But I'm saying if it was a non-disqualified person, and perhaps I can go back and clarify, prohibited transaction. If it was a non-disqualified person's IRA, like meaning an investor who partnered with you and then not related to you in terms of lineal ascendant or descendant, then their IRA should not have, they're just exiting the deal. So I'm just trying to understand whose IRA was it? Was it your personal IRA or was it an investor's IRA that's not related to you?
It was a self-direct IRA from Equity Trust, and I put in 20% of whatever that sales price. And
So the IRA was your IRA. It was your money.
Yes. So when I refinanced, they told me it was a distribution. So they took the name off the deed already. Then I don't have any tax benefit anymore by collecting rents.
When you refied out, because your IRA is involved, because it was your IRA and you refied out, what type of loan did you refi out? Like, did you use a
non-recourse? Correct.
Did you use a non-recourse or no?
Non-recourse.
You're saying non-recourse.
Okay, so you did use a non-recourse.
Sounds to me like you should still have an IRA, but
yeah, I would say connect with your CPA who's familiar with self-direction, or give us a call. We'll talk more through the minutia of your scenario.
Okay, thanks.
One of the things I've also learned is that just like there's a lot of real estate agents, some specialize in probate like I do, most don't. There's a lot of accountants. Some specialize in self-directed IRAs, LLCs, investments like this, and many don't. And real estate even is a niche that many CPAs or accountants don't get involved with, or I should say accountants. So you'd be careful that you're going to get advice that's appropriate for what your investment is. And I found myself, again, the last few years, paying a little more to get great advice is worth a lot more than taking the cheap advice and then not getting the right decision. So definitely want to think about who's telling you this as far as what you can and can't contribute. This is why you need a tax preparer and an accountant who's going to give you the right advice, who knows real estate and knows these rules. And I imagine, Reneika, you probably come across some of those that you might. Do you refer accountants for people looking for some assistance? Do you have?
We do have a list that we can redirect you to, whether it's a CPA or an attorney that's very familiar with self-direction, and you can connect with them. We haven't kind of touched on it, but I do want to just talk about, as we're talking about real estate, in terms of some things to be mindful of when buying real estate in your IRA, in terms of the titling. So the title itself will actually it'll be titled in the name of your IRA, so not your personal name, or not your business or your entity name. It will actually be in the name of the IRA if you're doing it directly through the IRA, meaning Advanta IRA, FBO, John Smith, your account number. And also too, again, if the IRA is the only party involved in a deal, all of the income that's generated from that, whether it's a rental or it's a flip, it will flow back into the IRA. If there's any expenses, it will be paid out of the IRA. Your IRA can certainly partner. If it's multiple people on the deal, just know that, again, percentage of ownership is based on whatever each party put in. When it comes to paying expenses, let's just say you're doing it directly through the IRA. You would submit whatever invoice to Advanta. Will pay it on behalf of the IRA. You can have a property manager. It's not mandatory, but you can have a property manager that oversees the property. You can't do any of the sweat equity in terms of maintaining that property. You get to decide what needs to get done, but you do have to hire it out to a third party. Let's just say if it was a flip, like a fix and flip, you can't be the one that's swinging the hammer or mowing the lawn. So I just wanted to kind of emphasize those quick items.
Well, so the first question, does it have to have your account number? It doesn't have the account number. It's the name of the institution for the benefit of, and then your name, if that's the name of your account.
On the deed, you want to put the full titling, but sometimes people don't want to, put their name. So you can just put, your account number. So
as an alternative.
Advanta IRA, FBO, traditional IRA, 1, 2, 3, 4.
Right.
Advanta knows that's your account number. You know that's your account number. We can report to the IRS that's your account number, but everybody doesn't have to know that's, hey, that's John Doe's account.
Kind of like a Swiss bank account. It's kind of very appreciated. Nice. Okay, good. And does Tao have to have the account number? Well, they have to know how to designate or deed the property, Chris. So somehow they're going to either deed it in the name of the IRA or in the name of the IRA with account number, or if for the benefit of the customer or the benefit of their account number, one or the other. But somebody has to get the benefit of that property.
For an LLC, it'll be titled in the name of the LLC. So let's just say, let's talk about checkbook control if we have time.
Yeah.
So checkbook control just simply means that it's not an existing LLC that you personally or currently own that you do business or you operate from. This is going to be a brand new LLC. You get to decide what state you want to open it up in. You get to decide what you want to name the LLC. But first and foremost, you would open up your Advanta account. You would fund your account, whether you're rolling over from a former employer plan, transferring from an existing IRA, or making a cash contribution. And then you would go to whatever state you want to go to, open up a brand new LLC. You name it, you list yourself as manager, or you can list someone else as manager. You also draft an operating agreement. That operating agreement document is going to let the IRS know that, hey, when this LLC goes out and buy 123 Main Street, don't come after you personally to try to tax you. It's actually owned by your retirement account, which is tax sheltered. Advanta, as the administrator, as the custodian, signs that operating agreement on behalf of your IRA. Ultimately, again, before any money leaves your account, you read and approve, you give your consent. Advanta will then issue a check from your IRA account with us into the name of that new LLC, or we can send it electronically. Let's just say we issue a check, give you that check, you go to whichever bank you want to bank with, open up a checking account. You have the authority to do that because you're the manager, deposit those funds, and now you literally control the purse string. So if you want to go out and buy 123 Main Street, boom, you can submit an offer in the name of that LLC. If you need to pay a contractor, you can pay, using checkbook, hence checkbook control, or you can get a debit card. Do not get a credit card for the LLC that's associated with your IRA, again, because you can't personally guarantee any lines or loans when your IRA is involved, but you can, get a debit card. You need to go to Home Depot, you control the money, you can cover that. If there's any other expenses, you pay it on behalf of the LLC. If there's income coming in, again, it's a rental property. The tenant sends the rental check to you, deposit it into that LLC's bank account, and you can just rinse and repeat. So that's the checkbook control feature.
Nice. You guys been doing this for a while. You've worked out the details. It's really interesting because I did this. I had a self-directed IRA with you years ago. I want to say 5-7 years ago, maybe. I don't know how long. It wasn't quite this figured out. Like you guys were good. But you did a lot of this since me.
Yeah, streamline our process just to kind of give you that, again, that one-on-one feel where you have a direct contact, and then just make it as simple as possible. Just because most times it's, either a new concept for a lot of investors. When I opened up my account, it took me 6 months before I even really okay, this is what I'm going to do. I took my time, I did my due diligence to make sure it made sense for me. So a lot of times it can be a new concept for most investors, or you just don't have the time or the bandwidth. So depending on how active or if you're wheeling and dealing, checkbook control may make sense for you. If you're a passive investor, meaning, hey, you're just lending money out of your IRA to a fix and flipper or investing in a syndication, then just do it directly through the IRA. Allow us at Advanta to do what we do best, which is, do the administration, do the record keeping, and handle everything based on your direction.
Yes. So you got a question from Christopher, which is, you see a lot of direction. What type of investments have produced the most attractive returns? I don't know they're going to be able to give advice on that. But Reneika, what's a common denominator of successful, happy customers with you? What do you see? What's the most common profile of investment that you see? I understand it's just your vision, your little slice of the world, but what's the most common kind of real estate investments that you see investors using your product for and being happy with it and getting some good returns?
Someone who's already familiar with the concept, like they're actively in real estate as a whole, and whether they're raising capital to go out and buy, a small multi-family unit or go out and buy apartment complexes, just investment providers who are actively already, in the space, real estate investing. So whether you're, doing a combination of, notes and mortgages, or you're fix and flipping, or you're doing, commercial where it's, storage units. So just the active real estate investor. But again, that doesn't if you're new to this concept, by all means, I would just tell you get started. Just there's something available for you to at least find your footing.
Yeah, and that's why we did this today. Was really, again, it's a little more sophisticated topic than we normally go through. But for somebody who has some cash and wants to get started, here's a way you can jump in. Okay, so for somebody who's new and eager to learn, and IRAs, buying property to rent out and LLCs, what do you advise someone new in the industry? It just says iPhone doesn't have a name. I think that I just did another interview earlier today with a real estate coach for new investors. And he says, you have to have education, you have to have a process, and then you have to have the confidence. And it's always scary to make your first investment of any type. I recently, about a year and a half ago, started investing in multifamily. The first investment was really scary. So, one trick is find a small piece you can bite off. I know for me personally, Grant Cardone had a smaller investment size option I jumped in on. And once I did that, I felt more comfortable. And I did, several more since that time that it had been more comfortable for me. And so I say, whatever it is, start off with a manageable bite, but also you have to pick an area that you like. One of the challenges for investors is they jump on calls like this. And one day we'll talk about storage units. The next day we'll talk about motels. The next day we'll talk about fix and flips. The next day we'll talk about, rent to own. And each of those now create confusion. Any of them are good. You just have to learn it and work that system. And so I would say more importantly, find a mentor, a person that you relate to that will kind of let you watch as they invest your money, let you participate, ask questions, have control of the process. But you have to find a product or a system that you can use. And then as Reneika said, rinse and repeat. You can then do over and over again, either with them or on your own. There's no real right answer, the best investment or the best system. It's really one that you feel the most confident in, and you have the chance to get the resources. Any suggestion, Reneika, you must talk a lot of brand new or want to be brand new investors. What do you see as helping encourage them to kind of jump in and get started?
You're spot on in terms of, getting knowledgeable, educate yourself. A lot of times it's a new concept, so it can be overwhelming. But, keep at it. Just find, if you're already a part of a real estate group, or if you're not, get plugged into a real estate group. Again, that network, just being around other investors that are doing what you want to do. For me, when I first got started, I know I wanted to be in real estate. So I'm like, okay, well, I need to go where real estate investors go. So just all of my investments I did initially was with a senior or tenured real estate investor, just to kind of help me mitigate or hedge my risk. So I was okay with, just taking a small portion of it, just because I was going through that learning process. So I would just tell you again, find whatever you're interested in or have a comfort level in, start there, and then eventually it'll grow. But if you go to advantaira.com or you go to our YouTube channel, it's a lot of information. We have different topics, to your point. Some one day it can be fix and flip, it can be tax liens, it can be private companies, but just go there and type in whatever it is that you have an interest in, or just look at our basic general stuff about self-directing, and then it'll kind of lead you to.
I'm sorry, there. I pulled up your website, your YouTube to get that.
Oh yes, yeah. If you go to our YouTube channel, it's a great resource. We do a lot of educational content. But I would just say, get started in terms of, to get started, just kind of get educated. Just learn the basics. Hey, what are my options? What's on the table? And if you have an interest in something specific, just start there. Whether it's wholesaling or it's, working with a fix and flipper.
I would just add to that, just pick a date and time and get started, because you got to set a goal like anything else, push yourself to jump in. There's never gonna be a time it's not gonna be scary. It's just the nature of this business. But over time, you learn something. You learn how to limit your losses. You learn how to protect yourself. You learn to find good people that you can count on, and they'll help you be successful. Thanks, Brianna, though, for sharing that. I know it's going to be challenging for new people. That's why I do this call. I get asked all the time, and I don't really know where to send people. So I started this call on Tuesday so I could interview. For me, I want to meet Reneika. I can't just call her and say I want to talk to you. But I can invite her on my call, and all of a sudden I get a chance to interview her for time. Is very, very educational for me. But also for you guys, I want to give you an opportunity to learn and a chance to feel comfortable and ask those questions you might not be able to do on your own. Okay, so last call here. We've had her on for a nice visit today. I really appreciate your time. Any last questions? I think I checked on YouTube and Facebook. I think we're clear there. The chat box, I think we're clear there. If you look at the chat box, you'll see the link to the YouTube channel for Advanta IRA, and they have some nice different programs on different types of investments. So you'll find that hopefully helpful as well. And then Reneika, if someone want to get a hold of you, I know we put your contact info in earlier.
Yeah, I'll put it in again. So you can
what's the best way to
reach
get a
out
hold
to
of
me.
you?
You can reach out to me on LinkedIn. You can, give me a call, or you can, send me an email. I'm happy to, jump on a call with you or schedule based on your availability and talk through. We can talk as many times as you want to and need to. I worked with a client, and again, I personally took, 6 months to make sure it made sense for me. But I worked with the client before he opened up his account for almost a year, and now he's off to the races. So
Yes.
don't feel pressure like, okay, this is a new concept. We can talk about it from beginning to end as many times as you want to and need to until you feel comfortable with getting started. But I tell every investor, just get started. Like, no one's going to be a better steward of your money than you. In terms of building retirement wealth, if we look at the numbers in terms of Social Security, who knows if it's going to be there when you or I, retire. So we have to be actively or proactively involved with, growing our retirement funds, not just for yourself, but also think about, your kids or your grandkids.
Fantastic. Your grandkids, Reneika? Not really.
No, not yet. I have a nephew, but no grandkids.
Okay, good. I was aging myself there real fast. Okay, good. Well, look, thank you so much, Reneika. It was great having you. Great hearing your personal story and of growth, as well as sharing with other people, encouraging people. I really appreciate it. I know you guys are a huge company. You guys do a lot of these things, but I really appreciate the personal touch you've given us today. I've seen you before. I knew how good you were, but I really appreciate you sharing with people today kind of the path. So thank you so much.
Absolutely. Thank you, Bella. It's always a pleasure. Thank you, everyone, for allowing me to be here and just share time with you. Have a great rest of your day.
Great. And for everybody else, we do this every Tuesday, 3 p.m. Pacific, 6 p.m. Eastern. It's realestateinvestingzoom.com. Realestateinvestingzoom.com. We stream it live on Facebook and YouTube. Feel free to jump on there. We'll replay it as well. Come on next week. Come on live, ask questions. It's meant to be participative. Thank you so much. I'm Bill Gross, the LA Probate expert. Make